Good morning, and welcome to this webinar hosted by myself, Nick Cheney from Capium, and Robert Grant from Initor. Today, we're just going to have a presentation from Robert on how you, as the accountant, can help prepare your clients for the new tax year. And then in the second part of this webinar, we'll be looking at how outsourcing can provide the foundations for your practice's future success. Before we start, I just want to go through a bit of housekeeping, okay? We are going to be doing a Q&A at the end of this webinar, so please feel free to type questions in and we'll address them at the end. And the webinar is being recorded, okay? So this can be shared to you after the webinar has finished. But first and foremost, I'd like to introduce Robert. Good morning, Robert. How are you?
Yeah, good morning, Nick. Thanks for the introduction. Very well, and welcome to everyone who's attending our webinar.
Brilliant. Yeah, I'm really excited about this webinar today because I feel like in this current climate, accountants need as many solutions and tools in their kind of repertoire in order to kind of stay profitable and focus on growing their business at this moment in time. So I'm really interested to hear what you've got to say. We'll just give it another 30 seconds just to see if any other stragglers join the webinar. But for now, ready and waiting to get going on this, Robert.
Okay.
So would you like to get started? I'm going to jump off and go into the background. So if anybody does need any questions or anything like that, I will do my best to address them. But in the meantime, Robert, please take it away.
Okay, thank you, Nick. So, as Nick said, we have a couple of themes for our webinar. I'm going to present in two parts. Part one will be very much a recap on some of the major changes introduced by the Chancellor in his autumn statement for the new tax year, which is almost upon us. And more importantly, how these will affect your clients. And I will cover aspects of personal tax, changes in company tax. I'll also make some suggestions for reducing, personal and corporation tax bills for your clients. I don't think there'll be much new in there. And I'll also touch on some tax efficiency advice that you may wish to give single directors of small businesses, limited companies. A huge caveat around that, because you really do, as you know, need to take into account the individual circumstances and priorities of your clients when providing tax efficient advice. But nonetheless, against that background, I will offer some suggestions. We will take questions at the end of part one, and then we'll move into part two, where I will offer some comments on how I believe outsourcing can really help your practice succeed in the current climate and going forwards as well. So, part one, important changes for the 23-24 tax year. I think it's fair to say, as accountants, we are glad to see the end of the 22-23 tax year. We went through 3 prime ministers, 4 chancellors, myriad changes to the national insurance regime, promises about reduced personal taxes, which were reversed. And of course, we had to navigate all that, taking our clients with us. So I think the plea from me to government is that we have a period of stability, that we can really help our clients plan for the medium to longer term. So what are the more important changes that have been introduced? Well, there have been changes to the income tax rates and thresholds, mainly in Scotland around the rates, but certainly the thresholds for the rest of the UK. I'll talk about the national insurance rates and thresholds, and also the self-employed national insurance rates as well. Dividend tax and allowances, some changes around that, which I'm sure you're grappling with at the moment in terms of the advice you provide to your clients. And of course, major changes around the corporation tax regime from the 1st of April, which I am assuming that you're all prepared for and providing advice to clients. And as I said, I will offer some comments about a tax-efficient salary dividends mix for single company directors, but it's by no means cast in stone. So please consider the individual priorities and circumstances of your clients when you're embarking on that discussion. So we're just starting with the income tax rates and thresholds for England, Wales and Northern Ireland. No changes around the personal allowance. Basic rate stays as it is. We have, of course, changes around the higher rate and the additional rates. So these are important for tax planning around your individual clients. Now, the government has said these thresholds are frozen for the next 5 years. That may bring some certainty in terms of the advice we're giving, but of course that will be subject to change as the government's priorities change and possibly a new government is introduced in the next couple of years. But that's what we're dealing with at the moment, those changes around the higher and additional rate thresholds. Just a reminder that anyone earning over 100,000, the tax-free amount, the personal allowance, is reduced by £1 for every £2 earned over 100,000. This means the allowance is zero when you earn 125,140 or above. And you can see how the government has now aligned the higher rate threshold with the elimination of the personal allowance. So it's really important that your clients maximise all their tax opportunities to reduce the tax burden when they get to around that £125,000 mark. Some of you with Scottish clients will know that for a number of years there are different bands and thresholds for Scottish residents. There are two rates which do not apply in the rest of the UK, the starting rate and the intermediate rate. And there are, of course, different higher rates to pay and a top rate to pay as well. The overall message from this is that your higher rate taxpayers pay more in Scotland than the rest of the UK. And the same rules apply around the elimination of the personal allowance when anyone earning over 100,000 has it tapered towards £125,000. So the advice for Scottish taxpayers may be slightly more complex in terms of utilising all of those personal allowances and access to tax-free contributions for pension and charitable donations and things like that. But just to be aware, those rates and thresholds are different for your Scottish residents. This, of course, may change when we have a new Scottish First Minister, which is being worked on at the moment. But this is the environment we are working on with our clients for the new tax year. In terms of national insurance rates and thresholds, no changes around that for employers and employees for the forthcoming tax year and for the next 5 years. So you'll be familiar with the lowering earnings limit through to the upper earnings limit as well. So no changes around that, which is good in terms of consistency of advice. The self-employed, the amount paid on profits, we can see a slight change around the lower profits limit. This is now aligned with the relevant national insurance paid by employees. So a slight increase there to 12,570, but no other major changes around the self-employed national insurance paid on profits amounts. Dividend tax and allowances. Well, there's no change in the rate of tax to be paid for the forthcoming tax year, but you can see the direction of travel that the government is pursuing. The tax-free dividend allowance is going to be all but eliminated over the next 2 years. So it's shifting from £2,000 down to £1,000 in the next tax year and then down to £500 in April 24. So really, for tax planning, there is not much to play with in terms of the dividend allowance going forwards. So what can we do to reduce the client's personal tax bills? It is really important that the personal allowance is utilised effectively. So you should be discussing with your clients how they maximise contributions into a personal pension scheme. You will be aware the upper limit each year is £40,000. How long that remains, we don't know. Every Chancellor budget, we hear that there's going to be some tinkering with that and it may be reduced. So I think it's important that that is utilised as far as individuals can afford to do so. Where possible, there is a carry forward allowance for a couple of years, so you can max out your contributions in a single year by carrying forward allowances from prior years, and also make sure the dividend allowance, as it is at the moment, is maximised as well. And of course, ensure all employment-related expenses are claimed, business mileage especially. Your client should be looking at that, and also home working expenses. So there are some levers you can pull to help reduce your client's personal tax bills. In terms of the self-employed, there are a long list of expenses that can be claimed against profit, as long as those are wholly and exclusively for business purposes. I won't read through these, but there are some there that are certainly worth mining around home working expenses, premises costs, around rent, business rates, etc., and making sure that all of the business-related expenses are claimed as they are incurred. Now, corporation tax. I'll spend a little time on the impact of that at different profit levels. But you will be aware there's some major changes around this agenda. So any of your clients who are fortunate to have more than 250,000, which is the upper limit for profits, will now be paying a main corporation tax rate of 25%. Below 50,000, the small company rate of 19% will apply. So no changes there. But there are some complex calculations where businesses are making profits between 50,000 and 250,000. So the main rate applies, and then the company is entitled to something called marginal small companies relief, using a marginal rate multiplier. And I'm sure you'll have seen some spreadsheets with the calculations that you can use when you're calculating the tax due on your client's profits. Now, the next slide will really show in quite stark terms the impact of those changes. So if we start with the the tax payable as is on a company making a profit of £50,000, tax payable 9,500, very straightforward. But having a look ahead to the next tax year, once you go up those stages through 100,000 to 250,000, you will see the tax payable really start to increase with additional marginal tax to pay right through to the £250,000 threshold. So you're seeing some really eye-watering effective tax rates that your clients may not be wholly familiar with. So it's worth discussing with them how they can get that tax rate down as much as possible through maxing out the expenses they can charge against profit. So in a nutshell, any companies reporting a profit of more than £50,000 will pay more corporation tax from April 2023, and you will have higher effective corporation tax rates going forwards. So a lot to take in for your clients and a lot to communicate to them for the forthcoming tax year. So how can we help our clients reduce those corporation tax bills? Well, as I said, ensure all of those business-related expenses are claimed. That includes a tax-efficient mix of salary and dividends. Some of your clients may now be asking to take more salary and charging that against expenses, and of course reducing their corporation tax bill that way. There are repercussions from that around employers' national insurance, which we'll touch on when I come on to the tax-efficient advice section of this presentation. But some of your clients will be asking, what is the impact of that additional salary on my corporation tax bill? Of course, the business mileage for employees should also always be charged to expenses, and company pension contributions can be made to personal pension pots. Home working expenses can be charged to profit, as you know, as can subscription costs to professional qualifications, and also training for employees as well. And any other wholly and exclusively business expenses should be claimed, to reduce that corporation tax bill. At a more complex level, for those larger clients that you have, any entitlement to relief should always be explored at the individual business level. R&D tax relief, the AIA allowance, which remains at £1 million, is fairly lucrative, and of course capital allowances as well charged against profit. So there's a few levers you could pull there to help your clients reduce their corporation tax bills. Okay, so I said I would talk about the tax efficient salary and dividend advice that you could provide to single directors, mainly with owner managed businesses, companies, close companies, for instance. A huge caveat around this: there are a lot of moving parts in determining the most tax efficient salary and dividends mix for an individual director, given their personal circumstances and also the company's priorities as well. You will need to consider the personal tax to pay, the employer NI to pay, and also the corporation tax to pay. So tailored advice is essential. This is not a one-size-fits-all piece of advice, but these are things you can think about when you're providing that tax-efficient advice to company directors of a single director nature. So the context for this is the primary NI threshold, which is aligned with the personal allowance, is 12,570. So no national insurance is paid by the employee at that level. Secondary NI threshold is lower, of course, at 9,100. No NI is paid by the employer to that level, but above that level, of course, the employer does pay NI. So you'll need to consider the impact of that on the overall tax burden on an individual business. Of course, the salary in both scenarios is above the lowing earnings limit. So the employee will earn NI credits towards their state pension at either level. So that's important when they're building up those state pension credits. Another important factor in this is that an accountant and any payroll provider will surely charge a higher fee when the salary is above the secondary threshold because of the employer NI liability that will need to be calculated and submitted to HMRC. So if we take scenario one, this is the potential tax efficient advice you could give to a single director who wants to take a salary at the NI secondary threshold. This assumes there's a single director only employee, there's no entitlement to employee allowance, just keeping it nice and simple, and they're a basic rate taxpayer. So starting with the outgoing tax year, salary 9,100, that carries forward into the new tax year. Easy to calculate the dividends taken above the salary up to the basic rate threshold. And then you have your headroom where you can utilise the personal allowance to take more dividends from the business if those are available to take from profit. And then you can see the impact of that dividend allowance reduction from 2,000 down to 1,000 down to 500. This means the taxable dividends increase, of course, and you will pay dividend tax at the basic rate of 8.75%. So all nice and simple, but you can see the additional tax burden for those directors who want to take the salary at the NI threshold at the secondary level. The tax paid on dividends is higher. If you take the NI primary threshold level, of course, there is a higher salary to take from the business. That higher salary is in turn charged against profit. So you reduce your corporation tax liability. There is, of course, less dividends to take, and then total income to the basic rate threshold is, of course, 50,270. You don't use any of the personal allowance for tax-free dividends at all. You can, of course, utilise the dividend allowance, but that, of course, again, is reducing over the next 2 tax years. And then you see your taxable dividends at 35,700 going out, increasing over the next 2 tax years. And then you see your dividend tax exactly the same level, 8.75%, same liability. Now, the important consideration here is the business will pay employer NI. There was an increase mid-year in 22-23, so you can see a slightly higher amount was paid. It's probably not worth getting into the detailed calculations of that, other than to say that going forwards, the employer NI to be will be around £478 per year for the business. So you can see the subtle shift in the burden of tax from the individual to the business. So taking all that together, what do we have for the 23-24 tax year? The NI paid by the company as the employer, if its salary set at 12,570, is 478.86 per year. That will reduce company profit and available dividends. The corporation tax reduction of that threshold rate and the additional salary expenses are basically cancelled out by the additional employer NI to pay. And of course, there's the corporation tax changes to consider from 1st of April 23. So as I said at the outset around this, there are a lot of moving parts in the advice that you will give to the individual for personal tax and at the company level in terms of corporation tax to pay. Certainly my view is it's a truly marginal decision. Clients may prefer the cash flow advantage of the reduced payroll and NI costs evident at the secondary threshold level, but tailored advice is essential. But you have all these levers that you can pull when you give that advice to the individual company director. So a lot to consider there in terms of some of the comments that I've offered. Nick, I don't know if you want to stop and pause for a moment and see if there are any questions from part one, or if you have any comments to offer from your side.
No, brilliant. I think that was fascinating, Robert. And I believe we're going to be sharing the slides in the webinar afterwards. So for those who want to kind of go through it themselves, we'll have that opportunity. And of course, this could all change again in less than 3 or 4 weeks' time on the 15th of March, when the Chancellor sets out his new budget, which I don't know what to believe anymore in the news, but he may have a little bit more wiggle room. What that will mean in real terms for businesses and individuals alike, only time will tell. But I'm certain, Robert, I'm sure you'll present an update in the future on that and the future implications of that. So yeah, please. I think firstly, whilst we are going to wait for any questions that appear, we're just going to quickly run a poll, okay, just about outsourcing. What you may or may have not heard from it yet. So hopefully that should be popping up shortly. Yeah, it's come up now. So if you could please fill out that poll, that would be great. I don't think there are many questions at the moment. And so the next poll question is, having attended our webinar, how likely would you be to consider outsourcing in the next 12 months? Okay. Brilliant. Okay. So while people are kind of putting the responses on in the background, yeah, I just want to thank you for that first part, Robert, and just kind of give a bit of an introduction into the second part. I think in the current squeeze that we find all of ourselves in, be it business or individuals, due to inflation, due to the macro and microeconomic climate that we face ourselves in, I think we need to really explore a load of different opportunities and avenues to help our business survive and continue to grow. I think I was watching an interview on the Andrew Neil show with Mervyn King, and he said what we need to do a bit more is experiment, okay, and try different ideas and concepts to help our business grow, okay. So in that perfectly sets the scene for how outsourcing, I believe, and Robert probably believes a bit stronger, can help your practice in this regard, okay. So before Robert gets started, I just want to quickly run through some of the outcome of the poll so far. Okay. Outsourcing, are you considering it? About 25% of the audience are considering it. Half the audience are not considering it. So, Robert, you've got a good job to convince them there. And the remaining 25% just want to know a little bit more before it kind of piques their interests. Okay. And also from the other poll, it seems about a quarter of the audience really want to focus on outsourcing as part of their business strategy for the next 12 months. And then about 30% think it's a possibility. And then the remainder are quite unlikely. So I think we've got quite a good mix of skeptical and those who are considering it, Robert. So I think that sets the kind of scene for you to kind of present some solutions and some ideas about how outsourcing can really help lay the foundations for your practice's success.
Okay, so thank you, Nick. And we'll move into part two, which of course is around the outsourcing agenda. And just sort of building a bridge between part one and part two. One of the themes of my comments throughout part one was the need to engage with your clients at quite a detailed level to understand their personal circumstances and also the direction of travel for their businesses, the growth plans that your clients may have and how your advice fits around that. Certainly creating the capacity and the freedom to have those conversations with your clients at the level that they need, providing the advice that they need and maybe the additional services that they need. Outsourcing can certainly help you free up that capacity to spend that additional time with your clients. So just picking up on the areas that outsourcing can support you with, it's around digital bookkeeping, year-end accounts, payroll, of course, which takes up increasing amounts of a practice's time, given all the changes around national insurance we've seen in the last 12 months. Personal and company taxation, outsourcing can help with that. Recurring tasks around VAT, returns preparation and submission, and also secretarial services. Now, in terms of the sectors that you find yourselves in, these services can be provided whether you're an LLP, right through to a limited company, sole trader accountants, or even small, mid-large companies with finance functions. So really, an outsourced service can be tailored to your own circumstances within the practice that you're managing. So how, at the detailed level, can outsourcing help your practice succeed? I'm going to leave this slide up for a little while and really just talk to it. So in terms of your core business activities, outsourcing is for all sizes of clients. It doesn't matter if you're Big Four or right through to a sole practitioner. You will always need time to focus on those business activities. Performing a strong due diligence on an outsourced partner will make sure that they're attuned to your core business activities as well, and they will support you in delivery. And you also need to make sure when you carry out that due diligence that an outsourced partner is the right cultural fit for your business as well. And so again, that all helps with that working towards your priorities. I've mentioned that outsourcing will free up your capacity to spend time on your priorities for the short, the medium term, and the longer term. I mean, we all find ourselves in our practices firefighting, backlogs of work, peaks of work around self-assessment season. Certainly, outsourcing can help support you through all those traumatic periods throughout the calendar year. In terms of the quality of work that outsourcing produces, it's as high as anything a UK practice can produce. And that in turn helps with your service delivery and meeting your clients' expectations. So from the outset, outsourcing will help you focus on your core business activities, whether they be spending time with clients, driving up quality standards, or improving your turnaround times for work. Of course, you'll be most interested in increasing the efficiency of your business and reducing the costs. Now, of course, with an outsourcing arrangement, you control the costs and you gain the competitive advantage through the increased efficiency that outsourcing will bring. The increased efficiency, I mean, in terms of systems, controls, processes, and outcomes. Typically, as volumes of outsourcing work increase, your unit costs will reduce. That's not always the case when you're employing accountants in the UK. You will inevitably see your salary costs increase. So you can see your unit costs reduce as your volume increases as well. Service delivery times and turnaround times are agreed up front. They are contractual, so that can help increase your efficiency as well. And you will manage that contract as you would any other contract. And if for any reason that contract condition is not being met, you can discuss that quickly with your outsource provider, and make sure that those contractual terms are met. You will find that your internal processes and document manage arrangements are strengthened. A starting point for any outsourcing arrangement is a real analytical examination of your existing processes and controls and how you might outsource work and improve your efficiency in that way. And of course, automation is already driving the way we work, making tax digital around VAT, for instance, is driving automation and the way we engage clients. And of course, while MTD for self-assessment has been postponed, it's not going to go away. So preparing yourself now for those automative changes can really reap dividends in terms of increasing your efficiency and reducing your costs. Probably the most sort of attractive angle for me for outsourcing is it does provide you with a flexible resource you can scale and scale quickly. So if you have growth plans for your practice, you should really have outsourcing as an option to achieve those plans. Outsourcing is flexible enough to help you manage those peaks of work and any deadline-driven work, especially around self-assessment or company year-ends. Outsourcing can be quickly turned on and make sure that you can scale up quickly and meet those peaks of works. You can vary the contract according to your needs. Most outsourcing providers, and especially here at Initor Global, we have regular contact with our clients to make sure that the services we provide are exactly the ones they need for the growth of the practice going forwards. And of course, you will have additional capacity to widen the scope of services that you can offer to your clients as well. So taking all that together, outsourcing is a really easily scalable resource. The golden thread throughout all of this is, of course, how you engage with your clients and make sure that you have the capacity to do that in an effective way. Just remember that with an outsourcing arrangement, you remain the key contact for your clients. So there's no sort of risk of handing work over to an outsourced provider and then forgetting about it and anything like that. You remain the key contact, and you will have more time to discuss those services with clients that you never really got the time for in the past, and really exploit those upsell opportunities. Of course, outsourced providers are mainly offshore, but they do work to UK time zones. So you don't need to worry about how you contact your outsourced provider and the speed of response for them. And of course, most outsourced providers, especially at Initor Global, we have advisors around UK culture, public holidays, what's happening in the UK as well. So there's a really good contextual framework for the work that's carried out by your outsourced provider. And of course, most of your engagement letters nowadays will have clauses allowing you to outsource work offshore or to other providers. So again, that all helps with the discussions that you have with clients around why their work is being outsourced and the benefits that can be gained from that outsourced arrangement. Of course, you will identify the risk of any sort of people aspects to an outsourced arrangement. Some of your accountants, bookkeepers, payroll staff may feel a bit nervous about their work being outsourced. But certainly when I've outsourced, I've always found it helpful to be completely clear with your teams that outsourcing isn't a threat. It's a solution to help your business grow and also meet your peaks of work. Outsourcing should always be part of your operating framework. I mentioned it shouldn't be forgotten about. It's important that you're clear with staff on where it fits in to the business going forwards. And that means updating internal processes, so that you understand the impact of the outsourcing resource on your peaks of work, on your deliverability, and also on the quality of work as well. So you will improve your resilience where you maybe have workforce issues to resolve, and address any short-term capacity issues if you lose an accountant or if there are recruitment and retention issues as well. So you can use outsourcing really as a lever to help meet the career expectations of your people. And I suppose importantly around that is staff morale can actually be improved where you're outsourcing those recurring tasks that you feel may not be helping individuals with the development, those bookkeeping tasks, recurring monthly bank reconciliation tasks. You can outsource all that recurring work and help your teams and your individuals grow and thrive and help meet the expectations of your clients as well. Of course, at the front of mind will always be data integrity and security. You will find that most good outsourced suppliers, such as Initor Global, we are fully GDPR and ISO 27001 compliant. When you're carrying out your due diligence on a potential supplier, make sure you ask for evidence of that, and that will help with any data security risks that you perceive with this arrangement. You can integrate outsourcing with your own data security protocols, making sure that it is fully integrated with your business. Most outsourced suppliers work using cloud-based accounting systems and access to your servers if needed through remote secure logins. So there can be no download of information or sharing of information. There are good security arrangements within our offshore offices. So you can be rest assured that your data security is always preserved. Of course, in due course, you may want to arrange a site visit to your offshore provider. They would always be delighted to see you. And of course, take recommendations from existing customers of a potential outsourced supplier. See what they think about data security and whether they feel it's preserved. And of course, with GDPR in mind, just as a point of detail, you will always remain the data controller. The outsourced provider will be the data processor in terms of your contractual arrangements. So those are some words about how I feel outsourcing can help your practice succeed. And just going on to my final slide, I can get hold of it. There we are. Taking it all together, outsourcing undoubtedly helps your practice increase efficiencies and reduce costs. It can add value to your practice by allowing you to respond quickly to emerging situations, not least any changes the government introduces March the 15th, as Nick alluded to. Recurring tasks can be removed from your day-to-day operations, allowing you to focus on your clients and the development of your people. Any future growth plans for your practice should always consider how outsourcing can help you scale and scale quickly. And my final comment is that outsourcing should never be seen in isolation. It's part of your operating framework, part of your delivery framework, and outsourcing, if anything, can enhance those arrangements that you have in place. So that's enough from me on outsourcing. Happy to take any questions or any observations, Nick, that you may have.
Perfect, thank you. Meanwhile, whilst we wait for our audience, if they want to ask any questions, we're just going to run a quick poll, and it just asking the audience really, if you are going to do outsourcing, which services would you consider potentially outsourcing? So yeah, that's coming up on screen now. I think I do have a few questions from my side, Robert. So if you were one of the percentages of our audience who was a bit unsure about outsourcing and maybe wanted to test it out, is there any particular service you'd recommend kind of to tip your toe in? And is there some kind of trial or could you maybe give a bit of insight into what the first steps could look like?
Yeah, I think any recurring task is ripe for outsourcing. And I would always start with, those recurring tasks that are quite labour intensive. So for instance, bookkeeping for your clients is an obvious one. It's very easy to outsource with most cloud-based softwares. Certainly here at Initor Global, we're familiar with them all. So that can certainly sort of allay any concerns you have that we have the skills and experience to deliver that work. At Initor, we have a 10-hour free trial, no obligation, so you can dip your toe in the water, as you suggest, Nick, and ask us to carry out some bookkeeping for a few of your clients. Year-end accounts preparation also can be very labour intensive when you have a backlog of work to catch up on, or a peak of work, particularly around those clients with March year ends, when you're looking to produce your accounts quickly through May, June, July. So year-end accounts preparation is another area, a recurring task that you should think about outsourcing at a very early stage. I think payroll is an interesting one. Many practices decide not to provide payroll services because they may be nervous about having the skills, the expertise, employing payroll experts, for instance. You can outsource payroll and offer that as an additional service to your clients. So you rest assured that you have payroll experts, basically at the end of an email or a telephone or a Zoom call, that you can sort of widen the scope of services that you can offer your clients. So I would start with those, dip your toe into the water, see the quality of work that comes back. At Initor, we have world-class turnaround times. Year-end accounts, usually 5 days. Bookkeeping, about the same. Payroll, we can do that certainly in line with HMRC's expectations. So I think those are good places to start.
Brilliant, Robert. And it's fascinating. The results from the poll would suggest that the most popular service that would be considered would be bookkeeping as well. And no one actually selected company secretarial. And I don't know whether that is because practices themselves don't offer that service. And I think just to build on one of the points you mentioned, I think outsourcing could really open up new revenue streams for you as well. Say if you are an accountancy firm or a bookkeeper who specializes in one particular service, you could open up the payroll aspect or the company secretarial aspect to your clients, increasing the average revenue per client. And you yourself don't have to actually do any of that work. You can kind of lean upon an outsourcing partner to do that for you. So you're just increasing your services, really. Brilliant. Okay. I'm just going to leave it open for a few more moments just to see if there's any more questions or that come from the audience really about outsourcing. But for now, really, Robert, I just really want to thank you for that. It's been really interesting so far. And I think you've definitely presented a good, viable solution for accountants who may be worried about the potential pinch points coming up over the next 12 to 18 months. So thank you. Do you want to quickly just run through what you're showcasing to us now?
Yeah. So just anyone who wants to reflect on some of the comments I've offered in part 1 or part 2, here are my contact details. As I mentioned, we have a free, no obligation trial, 10 hours of work. We can slice that up any way you like. Just typically, offshore rates at Initor Global are 50% less than UK accounted rates. So going back to my comments about reducing your costs, so please think about that. There are some email addresses you can contact us on. Visit our website and you can fill in our sort of contact forms. We'll get back to you. Those who prefer the more traditional ways of contact, we have a telephone number. Our sales guys will be delighted to talk to you. Just a reminder, as a webinar attendee, you will have a 10% discount on your first year of services and costs. And of course, feel free to connect with me on LinkedIn. Happy to do that and arrange any sort of contact, outside of those channels that I've just mentioned. So lots to think about there. And Nick, I'll just pass back to you to close the webinar.
Yeah, before you get away, Robert, one question did pop up.
Okay.
Okay.
Wow.
And it's from Jamie, and he just kind of wants to pick your brain about what your thoughts are using an outsourcing company versus direct employment overseas. I would just add that I would think outsourcing could be scalable, where you can scale it up and scale it down quite quickly. But Robert, you might have more experience on that point.
Yeah. Well, one of the things we can offer in Initor is you can buy our services on an ad hoc basis, 10, 20 hours a week, a month, whichever you need. But you can also directly employ individuals on a half-time basis or on a full-time equivalent basis. So they are part of your team. You direct them, and you send them the work that you need them to undertake for you. And that's a very popular arrangement, especially at the half-time equivalent rate. You may not have enough work from day one, to fill an accountant's portfolio. But certainly, as your practice grows, you can shift towards that full-time equivalent. So yes, we can provide that service, and yes, Jamie, it is extremely successful.
Brilliant. I've got one more question, so I'm just trying to get my head around it. Okay, I think that's all for now, chaps. So thank you so much, Robert, for your time. Look, I would really recommend reaching out to Robert just to find out more about what he's presented, because I think with any decision, you do need to do your research into it. And yeah, I think a free trial, 10 free hours at the very least, could get you a bit of breathing space to have a round of golf, or actually begin a new successful kind of partnership with an outsourcing provider. So thank you very much for your time today, Robert. Thank you all for attending. And please, everyone, look forward to another webinar coming from myself and Robert, probably about the new tax changes from the Chancellor. So thank you, everyone, and have a great day.
Okay, thank you, and good luck, everyone, with your forthcoming discussions with clients. Best of luck.
Cheers. Take care.